All right. Thank you, everyone, for being in here. I am going to let all of our panelists introduce themselves. So I'm sitting with Benjamin Horvath, Maex, Ament, and Joshua Field, who are all bringing unique perspectives on investing at the intersection of Web3 and sustainability. And please tell us what you do, where you're from, and where you focus in terms of investing. Stage, so we can ask the relevant questions.
Sure. Should I start?
Please do.
Let's turn this on first. Okay. Hi, everyone. Great to be here. My name is Joshua Field. I'm one of the managing partners at Contango Digital Assets. We are a $10 million seed fund based out of Toronto, Canada, and we are investing mostly just generally across Web3, a little bit more at the intersection of blockchain and AI these days, but very excited to speak today with these great panelists about the intersection of environmental sustainability and crypto, and how we can invest in that sector moving forward.
Great. Maex.
Yeah, hi. My name is Maex Ament. I'm co-founder of a protocol called Centrifuge, where we tokenize real-world assets. You heard that a few times before today, but I'll dig into that a little bit deeper. Happy to. And besides that, I'm an investor from a fund called Earth, where we invest in climate projects in general, but with a specific Web3 angle preferred. I do believe I'm one of the guys that told Adam, that was just on a panel, not to launch a security in the United States. That would be me. So, yeah.
I think a lot of people probably gave him that advice.
Cool. My name is Ben. I'm from Germany. We are an early stage fund called Blockchain Founders Capital. It's a 50 million fund. We invest 250K checks on average, pre-seed, seed. Started last year, so 10 companies on portfolio now. It's going to be up to 40 in total. And refi is a vertical that we're also happy to look at. Maybe one more thing, we don't invest in protocols, so technically we say we are more like a Web 2.5 investor, as we like to invest in marketplaces and SaaS models, but always with a spin that affects blockchain. So think of it ideally the next Alchemy or the next OpenSea or the next Coinbase. Fingers crossed. Yeah, that's us.
Yeah, that would be great. For everyone involved. So this is an exciting time to be doing a panel on investing in Web3 at Flowcarbon. So I'm one of the founders of Flowcarbon. We've been hosting thought leadership events around refi since our inception. And really it's because we are early stage and the space is early stage. And this year in particular, there's a lot of momentum and a lot of forward-looking, I would say, tailwinds and excitement around Web3 again. And then as that pertains to sustainability. So what's your forecast or what's exciting you most as an investment trend right now in 2024?
Do you want me to kick that off?
Sure.
So, I mean, I think there's two things here. First, I want to talk a little bit about not just trends in investing specifically at this intersection, but just momentum that hopefully the entire crypto ecosystem will see when it comes to sustainability. I think kind of the big overhang when it comes to investing in crypto for a lot of people that are outside of the space is a lot of these environmental impacts. And when you really break that down, what does that look like? It's really what's happening with Bitcoin. And so, Bitcoin is always going to be a dominant force within this space, regardless of investing in other areas outside of Bitcoin. There's always still going to be that stigma that overhangs investing in these other areas as well. And so as an investor, when you're looking to generate returns for your LPs, and you look at a lot of the protocols that you're investing in, a lot of this is network effect. You have to bring more and more people into this world, into this protocol, into this network in order to make a return on your investment in some sense. And so I think it's really important what's happening within Bitcoin right now, where a lot of these miners are starting to transition to more and more renewable energy, regardless if that's them being mandated to do so or because it's just becoming cheaper and cheaper to use things like solar. So just wanted to mention that. When it comes to like actual things that we're looking at investing in, I'm sure Maex is going to talk a lot about this, but it comes down to bringing things like carbon credits on chain. If you look at the world of carbon credits to date, it's been from someone that's not in the world of environmental sustainability, but looking outside to in, it's a bit tough to manage, it's a bit tough to access. And so when you bring things like carbon credits on chain, you're bringing a whole new pool of liquidity. You're bringing the ability for people to actually access this in real time and price these assets in real time. And so that's really exciting to us to look at certain protocols and founders that are building specifically in that space. And then one final thing before I turn it over, something that's also just really exciting personally to me, as someone that really believes in the idea of decentralization in crypto, is the idea of these environmental DAOs that are popping up. I think it's so cool that there's things like Constitution DAO, where a group of people that were excited about buying the American Constitution to conserve it. Unfortunately, it didn't work out, as you probably all know if you're following that. But the ability that blockchain can bring people together to potentially do something like clean up an oil spill if they want to bring their capital together or organize in a way to do that, I think is really cool. So both of these spaces are going to continue to merge over time. But I think the biggest kind of investment trend is going to be about bringing carbon credits on chain.
I want to stick to Bitcoin for a moment. I mean, specifically because we just tested an hour ago 64,000 again, which is epic. It is. But in that space, what we saw, man, for the last 2-3 years, just where Bitcoin or mining is used to subsidize actually renewable energy production, and it was a little bit of a non-existing dream for the last 2 years, but for the last 3-4 months we see actually a lot of projects where this is a reality. So where again Bitcoin mining, and we have a solar farm, and we all know batteries are expensive and sometimes it's hard to put it back into the grid. So using Bitcoin mining to actually mine Bitcoin with the excess energy, that then helps to bring the price of the renewable energy down. So quite some projects do that now, quite successfully, and one in particular does that in San Diego for residential areas or for residential houses, where I can put in solar panels on my roof, I get a battery, everything for free, and I get the electricity for half the price. So this is now becoming a reality. It was a lot of talk about in the last few years. Pretty excited to see that with the cost of the production of solar panels and all going down, but as well with the price of Bitcoin rising, that's possible. And we can talk more about biodiversity, carbon credits and everything, but maybe you first.
I mean, we are an early stage fund, so we invest pre-seed C. That means everything that we invest in is pre-product market fit. And I think our view on this is that we're actually not as thesis driven like in specifics. And the way we try to look at it is, it's very hard to predict the future, and especially like to time markets. So we are rather obsessed with the founders and the question on the quest that they have, like what's their battle plan towards what product market fit could look like. And I think within that, like these constraints, we're quite agnostic and rather try to look at what the market is kind of telling us. So with every founder we're talking to, it's always a hidden insight. Like it was literally, I would always put it the way that early stage startups is, I think, the closest environment you can have in an economy to like innovation. It's like literally like the battlefront towards innovation of whatever space that's currently happening. And I think as investors, you have this privilege that you're kind of standing on the sidelines, and every startup you talk to is potentially a hidden insight of what's currently happening in the market. So of course, there's a lot of ideas of what you can do hypothetically with technology and what kind of verticals it could open. But at the end of the day, we kind of try to rather like see how does it translate, or what does it translate into right now with the companies that we see in the market. And that being said, within these realms, we're quite agnostic. And my theory of what I've seen the last 12 months, or what I think it could be this year, or like the next 12 months, that could easily change. So if I meet like a great founder in 6 months and they just show me traction on numbers or on a use case of something that we didn't like really think of yet, I'm very happy to be convinced or prove otherwise about whatever biases or thesis of what we have. In the end of the day, and I cannot stress this enough, especially in the crypto space, a product market fit is the holy grail of any business. And it's certainly our holy grail because we invest before product market fit. And the companies that we invest in order for them to raise follow-up rounds, they need to reach product market fit. And I would also argue that's by far the hardest part for any company in any business in any vertical. And maybe that being said, if you ask me about the last 12 months of insights as an example, we invested in 3 companies. So out of 10 companies we invested in last year, 3 of them were around the content creator economy space. actually licensing around like music. There's a company with Hollywood like movie licensing. There's a company that focuses on YouTube tokenization and the monetization streams that come with YouTube content. There's a lot of movement of companies we have seen in the last 12 months that really excites us about the prospects of what the content creator economy could look like in different verticals and how that is affected by blockchain, that this is suddenly possible in a way it was not possible before. But yeah, that's, I think, the main trend, if you would ask me about the last 12 months, let's say.
So when you touched on this a little bit, but then how do you decide where you're going to invest? If it's pre-product market fit, is it mostly around team? Is it around vertical? Is there a particular something that you're looking for?
I mean, from my perspective, it's like a philosophical question, because I think every fund maybe have, like, there's a lot of similarities, but every fund will have a little bit like their own spin to it. I would argue if it's pre-product market fit, it's a completely different game than if it's a post-product market fit environment. So a growth investor that looks at a business like a SaaS case with millions of dollars of annual revenue will look very differently maybe at the business the way that a pre-product market fit investor does. For us, it's really like founder obsession in the sense of how excited are we about the founders and their views on, so what pain points do they see? Like, what's the founder market fit? Like, how well do they understand the problems they're talking about? And how driven are they in the end of the day? And how resilient are they? And also how intellectually honest and tough are they? This is also something we really care about. So when we do due diligence and we sort of like grill founders from all kinds of angles and trying to understand their thinking of what they're trying to focus on, I would argue it's often actually more of an intellectual exercise to rather understand the thinking of a founder. Like, they don't need to answer every single question perfectly, because sometimes no one can, but it's more about like how do they approach problems. And like from a psychological standpoint, I cannot stress this enough, because most people, they don't have these types of traits. It's like this brutal honesty. Like, most people in general like tend to like be like more agreeable, and they try to like pretend to themselves whatever life situation they're in. Oh, it's not so bad. Oh, it's not so fine. It's like, no, like, you're literally on the front line of trying to figure out of what you're building, if anyone is interested in, and you get like punched in the face every day by your customers at the end of the day. And are you the first person to acknowledge, okay, this is not as working as I expect and I need to iterate it? Because it's not our job to tell the founders like, oh, hey, this is not working, you should iterate. Ideally, you want to have a founder who's obsessed with customers, obsessed with product, and like just fiercely honest with themselves.
Yeah, I really like that. And that idea of being honest with themselves, I think it plays into this idea of founders with a lot of belief and a lot of charisma. And I think that's really important for something that we look at specifically at our fund. I think the reason why is there are so many great builders specifically in crypto, and I have to imagine also at this intersection of environmental sustainability and crypto. There's a lot of great founders all looking for capital. They've all built something that will likely come to some type of product market fit, or at least you hope. They have a great technical background. They've got a great network. But, you know, bring this back to one of the original points that I made on the last question. Founders have a responsibility to build community and to create network effects. And if you have a founder that's unable to be charismatic and is unable to speak their truth out to the world of crypto and have people excited by it, that product, doesn't matter how good it is, it's never going to find product market fit, because there's always going to be something more exciting, specifically in the world of crypto. And I think for founders here that are building at this intersection of sustainability and crypto, it's not the sexiest space. And so I think it's even more important to be charismatic and to go out there and build community and market yourself in a great way. So I think that's something that we're also looking for quite a lot when we're meeting with a lot of founders these days.
Yeah, not sure. I mean, everything that you guys said is great, so not a super lot to add here. I love founders that can build and sell at the same time, for the reasons you just stated. But I mean, you got to be able to you got to be charismatic. You got to be able to sell to everybody, to your investors, to the market, to the community, to get employees. So if a founder is not able to do that's a no. If a founder is not coachable, that's a no. Because I mean, the asset that we as a fund, as investors, bring to the founder is not the money. It's the fact that hopefully we know a thing or two how to build a company or a network or whatever. If the founder is not coachable, kind of pointless. So we skip that one. And what else on validation? Again, same as you just said, we're early stage, pre-seed, seed. I see a lot of funds that put whatever climate goals into their requirements, how much carbon is sequestered. I think it's a bunch of bullshit. It's great in a Series A and a Series B, but if we're in a pre-seed or seed environment, this is just made up, so we're not looking at it at all. It's got to be just a founder that is able to conquer a market that's crazy.
How much is this charisma sort of, like the importance of charisma, is that unique to crypto or more pronounced in crypto?
I think it's just more pronounced. Like, I mean, obviously, the best founders everywhere, everyone knows Steve Jobs, right? They build incredible companies because people just can't look away. But I think in crypto, the space just moves so quick. There's so many people looking to carve out their chunk of the pie. There's so much capital going around. Venture funds now, I know we had a bit of a rough year the last couple of years, but this year coming back to all-time high of LP capital coming into funds. And so there's a lot of capital to go around. And so in order to like stick out, you do have to be, you know, extra charismatic in this space. And I think it'll translate really, really well to building some type of online following. Crypto's super online, it's super global. And so the most charismatic people are probably the ones that are going to end up being funded and with some type of product that actually gets to market, even though they might not necessarily be the best builder. So I think it's incredibly important, definitely more important in crypto than the broad market.
Yeah, I mean, we have in crypto the smartest technical people around, period. And so if you're somewhat charismatic and you're able to somewhat dump down the message and get it to the audience, you're winning. So yeah, charisma and being able to message your brand is even more key in crypto than somewhere else. That's true.
I mean, depends also on how you define charismatic. Like, is it outgoing or is it just being like a great, inspiring leader? Like, I think it comes with different aspects. I would also challenge a little bit and say that I think we have the problem that a lot of funds, or like when I, for example, go to pitch events, I have a little bit the impression that probably the last decade that, for example, pitch events and how you build pitch decks changed also a little bit more of like an art to how you actually do it. And I don't think that's necessarily a great thing, because in the end of the day, the only thing that I really care about is it a founder that's customer and product obsessed and focusing on a relevant problem, and that ideally at some point of time will translate into usage. I mean, at the end of the day, I'm like a super strong proponent of whatever Y Combinator preaches of it. At the end of the day, like make something that people want. That's the only thing that matters. And you might have benefits being a great salesperson here and there and being super outgoing, but in the end of the day, the only thing that matters is that you build a product that works. And often, we have seen this also, especially in the last few years, independent if it's crypto or not, that a lot of founders, like, they raise a lot of money because they're like super charismatic, but they don't really build a relevant product. And I don't think that's like, it can also be like a distraction, right? So showmanship can be great, but in the end of the day, like brutal honesty, for example, I care much more about than if someone is great on a stage and presenting themselves, let's say.
Yeah, I don't think so. Actually, I mean, just if I may disagree, sure. Just building a product that fits the need and on paper is the great one, I think is not enough. I think you gotta make sure that people know about the product, understand the product, and that's where the charisma, where the salesmanship comes in.
But you would say that general or just specify for crypto?
No, general.
But I would argue there's enough companies that are a good counterexample, right? Like have really introverted, like non-charismatic founders on stage that have built like billion-dollar businesses like from scratch. So I think the problem is there's not like a one-size-fits-all, right? There's a lot of metrics. Like, is it also a B2C direct product, or is it like a B2B like backend cloud solution, like different verticals? So again, I think there's enough examples of founders who are great, who are, for example, introverted and don't have the showmanship like other famous founders have. Yeah.
But I also think the interesting thing about that, which I partially agree with you, but I mean, you look at someone like Vitalik, for example, probably a very introverted person, but also has this weird magnetism to him that's like cult-like in nature. And I think that is only really possible in crypto as well. I don't think you have to be extroverted, but you just have to know what to do. Like, he's able to come on stage to a panel like this wearing a shirt with a unicorn on it, and he's running a multi-billion-dollar protocol. I think just those type of things are also interesting. And if I can add one thing, I do think that It's a lot easier now, specifically in crypto, for founders that have built a following for themselves prior to monetize that following and have an immediate users when they go forward and build something. I think it's a lot easier to take that path, even though, yes, you can get lost down the road of fame and you have this following, etc. But I think it's a lot easier to do that than it is to build a product and have no understanding of what it means to build a community afterwards, because there's so many good products, there's so many good teams in crypto that you can get lost in the noise very quickly. And we've had this happen many, many times. A lot of our portfolio companies, we're singing the praises of them, but it just never seems to go anywhere. You're like, this is such a great product, such a great team. I don't know why it didn't work out. So I definitely understand both sides of it, but I would much prefer backing a founder that had the ability to build community and they'd already done it previously.
This is why you have different investors. and I think that I think there's probably some consensus here around the fact that charisma could be defined in different ways, whether you build the community yourself or at least understand that it's valuable and find the right team around you. There are many ways to get towards growth, but it's an interesting and important question. I want to turn us a little bit back towards refi and sustainability. Somewhat important at the intersection of Web3. That's what we're all convened here around, and that's sort of where you're all investing, Web 2.5 and Web3. Is sustainability a trend that you're seeing a lot of teams building in? Is it something that you're seeing demand for on the LP side? How much is that coming up for you in various conversations?
So speaking for my fund, LPs care about return on investment. I think it's really clear. Like, we're clear capitalists in that sense, in terms of priorities. So that can differ from fund to fund. So for our fund, it's clearly defined. Second, from what we see in the market, like I said, we're quite agnostic. We look at everything that we see in terms of different verticals. Like the refi space has not excited as much as, like, for example, content creator economy use case that we've seen in the last 12 to 24 months. We're a European investor. I mean, we also look at American companies, but primarily our deal flows in the European Union or European landscape. And the way, I mean, maybe it's a bit spicy, I don't know, but I would sort of compare this whole refi space a little bit with compliance, as in, because we also look at a lot of compliance companies. We also invested in compliance-related companies in the crypto space. And I would argue no one likes compliance. I don't know anyone who likes compliance and wants to do this voluntarily. The only reason why compliance exists, like, across the whole spectrum, is because there's clear laws and regulations, and the lawmaker, like, literally puts a gun to your chest and says, like, here are all the rules of, like, what you need to comply for whatever product you're building in the financial space. And if you don't, there's, like, harsh punishment and consequences for if you don't do that. The problem what I see in the refi space, especially since I've seen a lot of companies around voluntary carbon offset markets, is I don't really see a clear enough rules at this point yet, especially within the European context. So there's a lot of ideas of what you could build, and there's a lot of, like, this emotional goodwill of what I see a lot of founders communicate what they think the world should look like. But in the end of the day, we're quite capitalistic, and we think companies are capitalistic, and what companies say versus what companies do, we think are two different things. And what here matters at the end of the day, who's really willing to put money for these types of solutions? And to be a little bit maybe the pessimist here, I would just argue, as long as this is not clearly defined as it is, for example, in the space of compliance, I think it will take a clear regulation for most of these use cases to take off.
But not necessarily the Web3 one. So you're referring to sustainability.
Generally, anything. Like, if you take, like, decarbonization projects, it doesn't matter if it's Web3 related or not Web3 related. I would argue the term voluntary carbon markets, I have a problem with voluntary almost itself, because I know very few companies who want to spend money on that, unless they're forced to.
Okay, I want to take this one really briefly. A bit of a maybe different perspective on this. I think anyone that's worked in crypto for a long time, myself, I've been in the space since 2017, working professionally in the space since 2020. And when you're dealing with the crypto doubters, the first thing that always comes up is it's terrible on the environment. And specifically what they're talking about is really Bitcoin mining. But this overhang from Bitcoin mining really does have a bit of a dampening effect on the entire industry as a whole. And so, personally, we actually do look for at our fund founders that care about environmental sustainability, even if that's, for selfish reasons. because we don't want to be associated with this bad stigma that all of crypto is bad for the environment. What does that look like in action? We've invested in a number of layer 1 protocols. They've all been proof of stake. I've looked at proof of work protocols and potentially looked to invest in seed rounds and Series A, and we've passed on all of them because we don't want the teams that we're invested in to be associated with this negative environmental stigma that comes and kind of washes across the entire crypto industry. And so I think a lot of founders are keeping that in the back of their mind when they're building or when they're picking which chains to build on. And so that would be maybe a bit of a different approach to answering that question, but I think it's definitely valuable, and I definitely think that a lot of founders are thinking about it right now.
Yeah, I mean, I'm more optimistic when it comes to sustainability, and again, in the intersection of Web3 and climate sustainability, but even pure sustainability, being European myself, I think there's actually quite some regulations happening that push us in the right direction from a carbon perspective, from a Lieferkettengesetz to speak some German.
Do you think without regulation, would you be optimistic without regulation?
Not necessarily as much,
I would also say it's a necessity as part of the process in order for this to take off.
It's an accelerator, yes. That's for sure. That's for sure. And I think we do pretty well in Europe. I mean, obviously better than, unfortunately, here in the US, but and things are coming. So when I see companies, I see corporates buying carbon credits, I see corporates inquiring about biodiversity reporting, what they need to do. So I guess I'm a little bit more optimistic that it's actually happening on the corporate side. Because you're right, we need the corporates to buy.
I mean, for me, it's like a timing question. So I'm not like against it, but by default, it's more like I don't see enough regulation right now that output attraction excites me, but super happy to change that insight in 6, 12, 24 months, depending on what the market metrics tell us. Yeah.
Gotcha.
I mean, as somebody operating the space, I can tell you regulation has a real impact on corporate behavior, and corporates at the end of the day is the market for carbon credits. And the political environment makes a difference as well. So I think these things change and will change. Europe, I think, has been more advanced than the U.S., but the U.S. has large corporates that will quickly have to do a lot of purchasing.
I think actually, like in this space, I think most of the conversations that I would find interesting is actually about how do you influence the lawmaker to kind of define policies here, right? Because from an economic standpoint, like this makes a lot of sense. This is just about pricing in externalities, right? This is about like costs of public goods. And if you look at it from that perspective, we just need clear rules of the game of how it works. And as soon as that is like in compliance, where compliance has a lot of like rule catalogs that are clearly defined that tell companies exactly what they need to do in order to comply to the law. And the question I think is how do you accelerate that towards the government?
I actually think that's happening. If you convene or speak to any public company, chief sustainability officer or chief financial officer, they're basically waiting for clearer guidelines that are in development from the SEC. So I think that's happening, and I think you'll see rapid response from corporates. We see it in the built world. So in individual markets, there are laws. In New York, it's called Local Law 97, where all of a sudden there are emissions taxes basically on any building. And so basically if your building emits carbon, you get taxed. And all of a sudden, like immediately, like a light switch, this went into effect in January, there has been a rapid adoption of decarbonization technologies and solutions across buildings in our state and other states. California was ahead of it as well.
Can I ask a question? And maybe, is it Caroline, maybe this isn't good for you. How do you incentivize, just more of your everyday person to participate in the world of like carbon credits? Like if we have this blockchain technology that makes it more accessible for the everyday person, what does the end state eventually look like where everyone is participating in this world? Like I think, for example, maybe you have solar panels in your home and you want to bring the carbon credits that you might get from using the solar panels, you want to bring them on the chain, sell them to a corporation somewhere within this kind of decentralized open source environment. I think that's amazing. I think it makes a lot of sense. I think probably everyone in this room agrees with that. But when does that actually fully happen? And do we need government regulation to step in, offer subsidies for tracking equipment that people can have in their home so we can verify some of these things? I'm not really in this environment like you are, so I'm curious maybe if you have an idea of timeline where this is going to hit kind of critical mass.
There are all sorts of programs that exist for government subsidies to put solar panels on your own properties. I think there are infrastructure challenges to that. It's expensive and hard to do it, and you have to get buy-in from people. So talk about building communities. You need marketing evangelists who are out there making that the trend in design and making every home basically its own mini power plant, right? That I believe that is sort of where the future is. But you touched upon the tokenization of carbon credits as opening this up, obviously something we believe in. You mentioned it earlier when you gave your introduction, or at least earlier on this panel. And I'm curious, from your perspective, what's been interesting or how you see tokenization of carbon credits, how that's even been something that either you're engaged with or that you are excited about.
So, I mean, we've only really spoke to a couple of teams doing this. It's actually one of the reasons why I wanted to speak to Maex, because this is what you guys are essentially doing at Centrifuge over time. You bring real-world assets on chain. And
carbon being one of them, but
yeah,
others as well.
Yeah. So, I mean, I would love to hear your opinion on this, because honestly, I don't know if I can provide that much value to this conversation particularly. But from my perspective, I just see a world in which I can immediately plug in. There's liquidity for the carbon credits that I have. I'm providing accessibility to everyone in the world, whether that be corporations, governments, your everyday users, and they can all transact using these carbon credits in a way that makes more sense, that's a little bit more transparent. Because the current version of what's happening with carbon credits, I think there's a little bit of shady stuff going on sometimes, and being able to kind of put everything on chain, it's a lot more transparent what's happening. I think that's going to probably revolutionize this technology and get a lot more buy-in from your everyday person. But honestly, Maex, before we go, I only have 5 minutes. I would love to hear how you guys are approaching this.
Yeah, sure. I mean, I think we heard it before from Adam and a few others in the last few hours. So, I mean, the tokenization of a real-world asset in general, but let's focus on carbon credits maybe, or carbon forwards, or whatever you want to do, provides the benefits that you just mentioned. I mean, it plugs directly into DeFi if you have it on chain. Now, let's start differently. What's the problem of a project developer that wants to plant trees, that wants to build a solar farm? Well, today the issue is that in order to raise liquidity to do so, it doesn't get facilities that are actually small enough to start. There's no traditional financial institution out there that gives you a 5-10 million debt facility to do that. If you can tokenize the asset and raise liquidity on chain, you save a lot of money, because TradFi is incredibly inefficient from labor, from regulatory, from technology. So from that perspective, it kickstarts the development of those projects. So that's one key why tokenization makes sense. And then obviously transparency is one thing where, if done right, and my friends from Open Forest Protocol are somewhere here, if done right, you have from the beginning actually exactly what went into this carbon credit, what tree, what measurement. You see that all on chain, all linked to it. That's fantastic, because that's what fucking missing right now with many of the traditional credits that are out there. And then plugging into DeFi is a great thing. So we have the infrastructure that we built over the years, in decentralized finance. So having then those real-world assets on-chain, including carbon credits, it's fantastic to trade them. It's fantastic to build other financial instruments, and they are needed. So those are just some of the things, but we heard a lot of them before.
Okay, so follow-up question to that. Sorry, hopefully I'm not taking up too much time here, but what's the biggest roadblock that you guys have seen in terms of implementing this or attracting users to this specific use case or product within Centrifuge?
Yeah, I mean, we started 2016. Like, nobody gave a shit about that. There weren't a lot of issues, so we were way too early. That's one problem. What else? We actually did make quite some success in the last bull market, and it got stopped quite substantially in 2022. When things like Celsius and FTX, but as well Terra happened. So that put the brakes on. We need the institutional investors to come in. They didn't show up for a while. I said it before this morning on a panel. The excuse department is closed. So now, last year we were moaning. Everything was bad. But I think now we have a chance actually to accelerate.
Okay, thank you.
Max, RWAs are all the rage here at ETHDenver, more broadly. Can you talk a little bit about why you think that is all of a sudden such an important trend?
because we have a fantastic CMO for the last 12 months, and she finally as I said before, she dumps down the message and makes it way less complicated. What are actually RWAs, and gets the message out. I think that's one of the reasons. So I mean, the time is right. We did a lot of investments in the infrastructure. Blockchains are ready now. We can tokenize at scale. That wasn't possible in the last, 5-6 years.
What kind of capital also is catalyzing this or making this possible? Is it, were you waiting for funds, more established funds, retail investors?
No, retail, that's the thing we learned. We tried for the beginning. Institutions didn't talk to us because they were on this permission blockchain train with Hyperledger and all that shit. And so we tried retail investors, and there's just no scale to actually get enough liquidity from retail investors to solve the problems we want to solve and to fill those pools. So for the time being, we gave up on that and focused for the last 2 years purely on institutional investors and have some success with that. And that will change again. Retail will come, but for now, not.
Interesting. And what kind of assets are most interesting? Like when we think about what's getting tokenized, and obviously we're interested in carbon, but beyond carbon, what kind of assets are getting traction, or are theirs?
I mean, because, hate it and it's fucking boring, but treasury bills are tokenized by everybody right now. Why is that? Well, because there's liquidity in treasuries of DAOs and of foundations, and they look for something with yield. So not only Circle should get their 4 or 5%, they want that as well. So that's why we need treasury bills on chain. And on the other side of the spectrum, the more exotic assets, we did for years ago music royalties. I think you just mentioned YouTube. That's actually one of the things, creator stuff. Tokenizing that is an asset class that is on the other side of the spectrum, a little bit more exciting, more yield, not easily accessible in TradFi. So that's one thing we look at as well. And everything in between.
Are you guys seeing anything with bringing private credit funds on chain?
I think we do that with Block Tower.
That to me is the most interesting thing about RWAs. You look at like some of these private mortgage funds, which is becoming like a huge asset class, and investors and LPs are getting like 10, 11% returns pretty sustainably, with not a lot of foreclosures. And I just think of, the investors back in 2021 that had thought they made it, sold a lot of their assets, and then invested into UST and Anchor to get their stable 20% yield. We all know how that went. But giving crypto investors the ability to kind of take this more of a barbell approach to their investing, where they can invest in these, hyper risky assets, but then also turn and invest in some RWA protocol, where the back end is plugged into a private credit fund and they're able to earn 10, 11% on their stable coins pretty easily. I think that's really interesting.
Yeah. And maybe that's the last thing. One of the reasons why we probably had a hard time in real world assets until about a year or two ago was because there were the 20% returns. And if I came with my boring real estate for 6%, what person on chain want to invest in that shit? Nobody.
I think we've all learned our lesson.
Well,
that changed completely. There is no yield right now. So yes, we see inflow into our funds for more reasonable rates. Yeah.
Do you think that will continue to be the trend? We're back to seeing some pretty crazy rates on
I don't know. I can't predict the future. I hope we learned our lesson, but we probably didn't.
So that is my parting question: is what should we look at for the next 3 to 5 years? What's your outlook? And obviously, anybody who's been operating in the space, Joshua, you just mentioned since 2017. Max forever. So as we know, things move very quickly in Web3. But where do you see things going in the next 3 to 5 years?
So maybe from my side, since we talked a little bit about content creator economies, like a thought is, like with tokenization, in essence, on a high level perspective, it means everything can suddenly be turned into a financial asset, like hypothetically. And what I wonder, because I don't really hear arguments or debates about that a lot, is if everything's easier to turn into a financial asset, to me that means the competition among us is also going to increase 10x or 50x, 100x as well, because suddenly as a retail or institutional investor, I have so many more assets I can actually choose from that I want to allocate my money into. So what we like about content creator economies is that I think there's asset classes where it's not just about the yield in the future. I think there's going to be asset classes where it's kind of like 2-in-1 or 3-in-1 in terms of different effects. And what we can see in the content creator economies is that there's a lot of movement between like super fan communities and like content creators already since years. This has nothing to do with crypto. If you dive into how Twitch works and actually understand how they monetize, then you will find out easily that a lot of influencers have very vibrant communities that they monetize through like live stream events, and where they can also track in different tier systems which of their fans are actually as loyal, as important, track record and so forth. And I think if you combine that with not just consumption, but you actually invest in content, for example, of an influencer that you really like much earlier than maybe other people because it's quite early in the career of the influencer, and you combine this investment of it is an investment yield because it's the revenue streams that are underlying for the content, but at the same time it's also a fan token which can be used in many creative ways in the years to come. They could use it as a ticket for exclusive events or for merch or for discounts or whatever. I think there's going to be asset classes where suddenly several features in one asset are possible, and that's something that at least excites me quite a lot.
Cool. Yeah, I think for us at our fund, I know we're a little bit over, so I'll try to be quick, but we invest a lot at the intersection of blockchain and AI, specifically in a lot of like decentralized compute networks. I know that's probably counterintuitive to what we're speaking about today, because a lot of these compute networks probably use a lot of energy. But I think for a lot of the founders in the room, there's going to be an opportunity to find ways to make the world of decentralized AI more environmentally sustainable. I think the same problems and the same stigmas that plague the world of Bitcoin and Bitcoin mining are probably going to also end up in this world of AI, especially with all of these centralized AI, these huge data centers that they have. And so if we can get ahead of that in crypto in some sense, I think we're going to be in a good spot. So if anyone's listening, if you want to build something there, come talk to me.
All right.
All right.
Thank you, everyone.
Thank you, Caroline.
Thanks.